Welcome to Catanet TV. We're very pleased today to have with us Janice Koyanagi, who's the Director of Business Development for the Toronto Stock Exchange. Working very closely, Cata is with the exchange on boosting the profile of Canadian companies and really better understanding capital markets. And I was looking forward to the interview, and I wanted to put myself sort of in the head of being a company that's looking to go public and trying to understand, what are the benefits for going public?
Sure. Great. Well, thank you, John. First of all, I'm really glad in terms of our partnership and working together, and I'm really looking forward to it. In terms of your question, the benefits of going public, it's very interesting when private companies are looking at the different types of financing options that are available to them. So it starts with friends and families, moves to angel investors, VCs, private equity, bank, debt, and then it moves to the equity realm. And for each of these financing options, there's pros and there's cons that go along with it. In terms of the access to the public equity markets, there are key benefits to that. And the one thing is with equity capital financing, there's the option to go in and look for second, third rounds of financing. And it provides opportunities for companies at all stages of the growth to access this type of capital. It allows companies to expand their investor base, which provides liquidity and allows for their shares to trade. And typically, public companies get favorable terms for lending from banks. Secondly, it's an acquisition currency. As companies are looking to expand, there's two ways you can expand, through acquisition or organically. So if you're looking to expand your company through acquisition, it's a great currency to acquire your target company instead of using cash. It's tax efficient, cost effective, and a time-sensitive vehicle to finance an acquisition transaction. Thirdly, there's increased visibility, credibility, and prestige that goes along with the public listing. Your company is now subject to a higher level and standard of disclosure and information that it provides out to the public place. Also, there's more media coverage, there's analyst coverage, so there's great ways to build a company's corporate visibility. Finally, there's employee incentives. So that's one thing that is very much well liked by the companies to compensate, retain, and attract very good employees.
And I guess another key question is, how do you select the right market for your company?
You want to select a market that is suited to the size of your company. So you want to select a market where the investors have an interest in your sector that your company is in and the size that your company is in. And the market that can provide you the best access to capital. At the end of the day, you're going to choose a market that can provide you your initial round of capital raise, but your second and your third and your fourth round when you're looking to grow. Along with that access to capital, you're looking for a strong market that provides a lot of liquidity. So a lot of trading of retail and institutional investors.
What do I need to know if I want to become a publicly traded company?
In terms of looking at going public, there are 4 ways that you can go public. It's through initial public offering, you can go through a reverse takeover or a reverse merger, you can go through a direct listing. If you're already listed on another exchange, you can come and interlist on our market. And then the 4th way is through a CPC shell, or a special purpose acquisition vehicle. And that's a special vehicle that helps a company go public through a reverse takeover of a clean shell with cash in it.
Now, I would call you, of course, for a little more detail in each one of those.
Yes.
And you would gladly provide it.
Absolutely.
You've answered that question before.
Yes, we have a full BD team that can take you through and navigate you through the process. Each way to go public has a different level of complexity in terms of the steps the company needs to do to go public.
Of course, we're going to be doing a teleforum with you. I know you have some white papers, so I'll read those details. Cata's been very committed to best practices, so I always ask and think about, is there a formula for successful listing?
Absolutely. In terms of going public, the first thing you want to do is you need to put together a team that will take you through the process. And part of that team is legal advisors, investment bankers, investor relations professionals. You want to choose a team that has the experience and has done it before for companies in your sector and companies of your size. Secondly, you call the exchange. We have a whole team of business development professionals who will help you navigate you through the process, give you the introductions that you need to the financial professional services, and with people that will help you be successful in your public listing. Thirdly, you need to assemble a strong management team and board of directors that are committed to be a publicly traded company. It takes time from their perspective, and they lead the company in terms of the attitude in being a publicly traded company. You need to develop a strong investor relations program. For a publicly traded company, this is a very new initiative typically for a company. So what that entails is you have to develop strong relationships with the investors, both institutional and retail investors. And then next, you need to pick a market that's suited for your size. And that we have talked about earlier. It's very important. The one thing that you want to be is you want to be a big fish in a small pond and grow and attract the visibility and the attention to your company. The last thing you want to do is to be a small fish in a big pond. What happens? You're left to be orphaned and very much forgotten. And it's difficult for those types of companies to get the trading liquidity they need for the higher valuations for them to do good financings.
So that's a very nice formula.
Yes.
I understand that. I like to understand about the fish analogy, and maybe we have to do that at Canada as a nation. Janice, perhaps an initial question is, how do I know that I'm ready? Do I have to be a certain size, a certain degree of maturation in terms of research and development? How do I know that I should be calling you?
In terms of a company looking at listing on the exchange and trying to figure out if they're ready to do so, we have two exchanges. We have our TSX Venture Exchange that fills the need for small, startup, early stage, entrepreneurial type companies to come list. So these could be pre-revenue companies undergoing research and development or looking to commercialize. So you could have no revenue, have no profitability, but you're looking for cash to take you through the next stage of development. The second stage is for companies who are profitable, well-established. They're more geared towards the senior market, the Toronto Stock Exchange. The key things that we look at for a company to list is in terms of how much cash do they need? Will they be able to fund their operations over the next 2 years? We look at the strength of the management team, the board of directors, and then we look at the distribution, or how much is the value of the public float of the company that's going to be listed, and is there enough shares that will be traded in the public market for it to be deemed a publicly traded company. Those are the key things that we look at when we're assessing whether a company should be public and is ready to go public and meet our minimum listing requirements.
Very good insights.
In terms of are you ready to go public, the things that you need to take a look at to prepare to be a publicly traded company is, first of all, is get your financial statements in order. In terms of you need audited financial statements. That is usually the thing that takes the longest amount of time to prepare. Your management and your board of directors have to be prepared to operate and act like a publicly traded company, meaning you need to be prepare the company to do continuous disclosure every quarter in terms of financial results. You need to develop a strong investor relations program. You need a communications program for your shareholders. In terms of looking at the structure of the management team, you need to have a CEO, a CFO, a corporate secretary, a strong board of directors, and a good investor relations program.
And Janice, as you know, we're going to be creating a communique to better inform the industry, to educate them about the benefits of going public and how to work with the exchange. And do you have a call to action?
Absolutely. We have a highly qualified business development team to help your company navigate the waters of going public. It's very complicated, very tricky, and there's many aspects to it. We have a team member specialized in the technology, in clean technology, in the resource spaces to help your company, no matter what sector, no matter what size, understand the process and help you navigate, meet people that will help you take you through the process too.
So Janice, I want to thank you for joining us this morning. Janice Koyanagi, the Director of Business Development for the Toronto Stock Exchange. We look forward to working with you.
Great, thank you.